Part of negotiating with the IRS is knowing how much money you have available each month to pay the IRS. This is what you call your disposable income. And in today's video, I will show you how to determine that amount and how to avoid paying more than you have to. Hi, my name is Claudia Monkar, and I'm the founder of Monkar's Law Firm, where we help people get out of trouble from the IRS. Here at Monkar's Law Firm, we are experts at navigating the IRS maze and will customize a resolution plan to fit your individual needs to help you permanently resolve your IRS problems. And remember, if you haven't done so already, subscribe so you can see more of videos like this. So for today's topic, we'll talk about your disposable income. That is the amount of income you have available to pay the IRS every month. According to tax law, the monthly amount you have available to pay the IRS for your tax debt is your monthly disposable income. Now the question is, what is disposable income? Disposable income is your monthly income, that is the amount you made in the month, minus your allowable, or AKA reasonable living expenses. But there is a trick. What you consider to be reasonable living expenses, the IRS does not. According to IRS calculations, because of feeding and clothing a typical family of four didn't change a single dime from 2020 to 2021. It went from $1,740 per month to, surprise, $1,740 per month. We still have the figures for 2020, but I don't see any changes. That was no change at all. It is clear the IRS missed the memo regarding the pandemic inflation, and I'm pretty sure they're going to miss it once more. On top of that, this number applies to every single person, no matter where in the country you live. From the most insanely expensive zip code in America to the absolute cheapest place to live in the US. A family of four is allowed this exact amount, same dollar amount, for food, clothing, and the casual miscellaneous category. And that category includes credit card payments. I live in South Florida, and I can assure you $1,740 won't get you far, no matter how frugal you are in a family of four. And this weird fact of the IRS is just one data point in a large jumble of numbers that the IRS uses to determine whether or not a household is living beyond its means, i.e., whether your expenses are reasonable. And remember, the definition we discussed above about disposable income, reasonable expenses determines it. Living expenses. Yes, you heard me correct. Every year, the IRS takes a snapshot of what they consider the middle-class lifestyle, and they assign a dollar amount to different categories such as food, clothing, personal care products, miscellaneous, credit card debt, out-of-pocket health care, vehicle ownership and costs, rent or mortgage, and utilities such as gas, water, internet, and cell phone. While these numbers are derived from federal studies such as the U.S. Census and the Department of Labor, sometimes they leave you a little bit confused. Even more confused is when they set regional numbers for housing and vehicle costs, but the IRS, and these numbers are set at the county level, but the IRS seems to forget that it can be a huge variation between a county and the cost of housing. For instance, here in South Florida, the cost of housing could be quite different depending on what side of federal highway you live in. Now, as a tax geek and a numbers lover, I find this fascinating. But why should that be of any interest to you, you may ask? Well, it should be because the IRS uses these numbers to determine the allowable living expenses, determine how much of your income you should be spending on your basic needs. Once more, they get to determine what is your reasonable living expenses, and that ends up deciding what is your disposable income. Usually, if you owe a small amount, $10,000 or less, or if you're actually playing ball with the IRS, these numbers may not come into play. But if you owe a substantial amount of money, or you have history of defaulting with the IRS, then this definitely comes into play. Once they do, the IRS suddenly has an opinion of what you should and shouldn't be spending your money on. And I understand having a third party, especially a government agency, tell you how to spend your money and what you shouldn't is never it's never a welcoming thought. And it creates stress, and it can create all this negative energy. For example, if your existing auto loan payment is over the monthly limit set by the IRS, you may be unwilling to get a new vehicle, or simply impractical to get from out of that lease or payment plan without spending a lot of more money, given all the price increase. But the IRS will tell you to do so. Or considering the housing expense. If your current mortgage payment exceeds the IRS allowable amount for your family size, now it's really a bad time to be buying a more affordable house. With the insane cost of housing market going up, you'll be in a good luck situation. Yes, you may be able to sell your money for more. Sell your house for more money, but you may not be able to find another more house that you can afford. And as an added bonus, the IRS will get paid at closing, so you may not even have that much left that you thought you would in equity. So what should you do when the IRS drops the hammer and tells you can only spend your money on certain things, and that's it? They won't allow any other expenses? Well, there is hope. Sometimes you can negotiate and to figure out, and this is where the negotiation part comes, where you can make arguments to support higher expenses for certain living expenses, and you can discuss them why your lifestyle or your industry requires a higher limit amount. Of course, that's where we come in. And that's when tax planning and negotiation comes in. I would love to help you out. If you or a relative or a friend are facing the harsh limits of the allowable expenses that IRS imposes, we should have a talk and get that help you to get that resolved. Give us a call at 786-541-2705 to make an appointment, or go to www.talktoclaudia.com to see how we can help you. Until next time, bye.